Hello everybody, welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting this evening. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, please feel free to let me know. As always, keep in mind that no one trade is guaranteed to profit. There's risk with each and every trade that you take. With that said, we all understand there's also nice potential profits for each trade that you take, which is what we hope to find the best possible ways to go after those potential profits that we can. Keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. And we'll go over some unique ways of managing risk that our web trader and AvaTrade Go mobile app can assist you with. Some nice tools that I think are very helpful in that regard. Real quick, what is technical analysis before we get on the live charts and look for some opportunities? Basically, it's the historical movements of an instrument. You're looking back at the candlestick charts is usually the type of chart you're looking at. And you're looking for patterns, movements that in the past maybe lend some predictability to future movements. Obviously, there's no guarantee that future movements will mimic past movements, but this is what technical analysis is about, looking back, maybe also trying to understand why those movements occurred. Were there announcements on certain days that you see price levels were broken through? Maybe big headlines hit regarding some type of fundamental news that was unexpected. So basically looking at the technical analysis, you're basically reading the momentum shifts and the moves that occurred for lots of different reasons. But you're looking at it from a technical analysis perspective rather than a fundamental news perspective. But all of those headlines and articles and jobs numbers and economic numbers, they're built right into those patterns that you see on the chart. And so usually it makes sense as you're doing your technical analysis to pay a bit of attention to what's happening fundamentally as well, because they certainly are tied together quite a bit. And we tend to do that in the webinar also. So, we usually go about manual methods of technical analysis, meaning drawing our own lines, looking for our own entry points and exit points rather than relying on indicators, which are basically looking back and reading the candlesticks exactly like we learned to do in the webinars. I think it's more helpful to learn to do it manually. Then you can add your indicators later as a supportive type mechanism to see if the indicators agree with you or if you agree with the indicators as you do your manual methods of technical analysis. More of a confirmatory type mechanism with your indicators maybe rather than just relying on them blindly. Remember, an indicator is only as good as the person who programmed it in terms of looking back and trying to make predictions on things. So it probably makes sense for you to understand the technical analysis and the price levels and the lines and the movements, and then you can make a more informed decision as to what you want to do based on those patterns on the charts. If you have any questions, you want to give any input as we go along, please do so in the chat box. I'm happy to share information that's pertinent to what we're talking about or to answer questions as well that relates to the topics that we're on. Real quick, we can look at some headlines that have come in today. It's always nice to see what's going on. And so we can see Wall Street eases after 2-day surge as Tesla and Microsoft slip. So today's just been kind of a mixed day, sideways movement on a lot of the charts. We can see that here, slightly red right now, bouncing between slightly red and slightly green on the major US indices here. And we've got the volatility index. It's been down a bit all day, 3-4%, something like that. It's been down, showing that fear is kind of flattened out. It's not racing up, it's not racing down. And the US dollar has been pretty flat as well. The dollar index moving mostly sideways, maybe down a little bit mostly today, which happens if fear is down a little bit, if tensions are waning a little for the time being, then usually the effect on that is the US dollar tends to be more bearish rather than bullish during times of less fear. Not always, but that's the general trend that we see a lot of times. Now we take a look and we see also why is the market a little slow. South Korea, Singapore, Hong Kong, and China all have bank holidays today, market holidays. So it's a lower volume of trading today as well. Doesn't mean you can't trade. It actually, with the right strategies, can lend itself maybe to a little bit more predictability that maybe large price levels are less likely to break. So more of a ranging type trading day where you trade between an upper range and a lower range, up and down, expecting the support and resistance levels to more than likely hold. Obviously, while managing your risk, understanding it could be wrong, but that's what's been happening a lot today, and that's what you maybe could expect on a day like today, that major price levels and such won't necessarily break through as often on a more flat market day. So there are opportunities to be had. Number of mixed announcements coming in today. Really what we're looking at more maybe is tomorrow and the next day. Talk about what are the OPEC plus nations going to do about crude oil production. There's speculation what will be done. And we talk about the fact that there's a meeting this week, tomorrow, and maybe there could be an unexpected increase in crude oil production. Goldman Sachs analysts here are saying they think there could be. They're hawkish that the oil producing nations might increase production a little more than expected. Maybe the general consensus, though, has been that the OPEC plus nations will hold steady. They like the high oil prices. They like a larger profit per barrel. So really, we don't know for sure what they're going to say. What we do know is likely oil will have some decent movement tomorrow to be able to trade on, or even starting today leading into tomorrow. In general, if central banks around the world are talking about raising interest rates back up to stave off inflation, then if that in general will strengthen currencies by interest rates maybe being raised this year, stronger currency tends to pull down the price of commodities, right? If the dollar or the euro or the pound is worth more, then it takes less of them to buy a barrel of oil. Hence, the price tends to be less bullish, and commodity prices tend to come down if interest rates are raised in different nations around the world. Not a direct one-to-one relationship, but that's the general trend. As currencies strengthen, commodities may be pulled down. So there's some thought that the upper ranges that have been hit on crude oil maybe could be a pretty strong resistance point right now. And so we'll take a look at the crude oil chart as well. Still the Ukrainian-Russia situation going on with potential war outbreak. Ukraine announces plan to boost their army. U.S. demands Russian de-escalation. Now Ukraine's talking about over the next 3 years raising increasing the size of their army. That's not going to do much good in the immediate term, but that's their plan in the longer term. They feel threatened enough now that even if there's not war, they feel like their army needs to be a lot bigger now. And so they've announced that increase of over 100,000 troops over the next 3 years, they say here. And the diplomats trying to talk back and forth between the Ukraine and Russia and the U.S. and other nations, U.S. trying to take a large part in the brokering of maybe a deal of some kind. But boy, things could go bad pretty quick there when you have so many troops lined up on a neighboring country's border. So we have to keep our eye on that. Probably a good reason to have risk management built into your trades, because you don't know what could happen at any moment. A major war conflict could break out, and who knows what that could do to something like oil prices or other instruments as well. So be aware of what's going on around the world fundamentally as you're doing your technical analysis and lining up your risk management with maybe stop losses or hedge positions, or maybe you're using AvaProtect to protect for a set premium cost against losses for defined periods of time. Mohammed, you're asking how long is the China market closed? If you take a look here, all you have to do is go, let's look at tomorrow, right? Let's click at tomorrow on the economic schedule, still closed tomorrow. Then if we look at this week, we scroll down Monday, Tuesday. Let's go through the week. Here's Thursday, still market holiday in Hong Kong and China. Singapore no longer on Thursday. And then let's get to Friday. China has holiday all week this week. So all the way through Friday. But you see the other nations that have these holidays slowly drop off through the week. Hong Kong, part of China, but listed separate. As we all understand, they're kind of a democracy within China, and those in Hong Kong maybe consider themselves a separate part from China. China doesn't consider them that, but you see their holidays are listed kind of separate on the schedule. So anytime you want to know what's going on with announcements or schedules of bank holidays, you can look at an economic calendar like this that maybe you trust. There are a lot of them out there, and there's one actually built into our web trader platform and our mobile app that you can look at as well. Okay, good question. So a little bit lower volume of trading when large nations, large economies like China and others have bank holidays, market holidays. Okay, so let's first take a look at the app. I think it makes sense to do that, and then we'll go to the web trader, which is over here. You log in up here for the web trader. And if you want to download our mobile app, it's here. Go under trading platforms and AvaTrade Go, and it takes you to where you can download it. Very cool features. Let's take a quick look with a full screen view on my phone. And since it's technical analysis today, let's take a look at some features that give us technical analysis. We'll maybe do the analysis on the full screen web trader, but you can just as easily do it on the app. If I tap on this section here, we can get some free technical analysis signals. I like to use that because it speeds things up a bit with your technical analysis. If we look at featured ideas or analyst views, we'll get some technical analysis done for us. I tapped on the analyst views. Get free signals coming here on cryptos if you're in a region that allows crypto trading. I know our UK residents are a bit disappointed, some of them, that they can't trade cryptos with us, but we've got to follow the regulatory rules. Most other places, other than maybe Canada, with us are able to trade cryptocurrencies. And if you're in a region where you can't, you also have signals here on the standard currencies as well. Okay, you see USD, Canadian, etc. So we see here saying USD Canadian intraday rebound. That was the prediction. So you see the signal. If it makes sense to you in terms of what you think fundamentally, you know, maybe there's something to the fact that oil was pushing down a bit today. If we look at the charts, we'll see that, I believe. And also some fears that oil will maybe drop in price because of interest rates going up soon in many places. It's expected anyways around the world. Maybe that could create some bearishness with the Canadian dollar. And so, and with the idea that the FOMC committee in the US has basically all but committed to raising interest rates multiple times this year in the US, 4 times, maybe 5 times even, some are saying, there's reason why the USD could be bullish. So you've got some fundamental reasons behind why you might trust this signal. And that's kind of how it might make sense to go about looking at these signals as they come in, is as you understand the fundamental news a bit, then you look at signals and you say, okay, I can understand why this signal might say this. So then maybe you're more interested in that signal than another. And in that case, then you tap on the signal you're interested in, and the technical analysis is broken down for you here. So it gives you the preferred direction. It tells you some rules about whether the signal is still valid, meaning long positions, meaning buying. Long means buying in trading lingo. Short means selling. Long positions above $1.2645. That's this blue line, by the way. They're all color-coded the same way, all of these signals. So once you get the hang of it, they're very simple to see the technical analysis. So you see a support level here. You see it hit and went up in the past here. And these are 30-minute candles. You can see that they're showing you in the signal. Likely, if we went to 4-hour candles or 1 day, you'd see that this support level has other areas in the past where it hit and went up. So this was identified as an important support level. So they're saying as long as the price is above that level, then there's not a downtrend established. That's the idea of this signal, saying you're buying as long as it's still above $1.2645. So we look and we say, okay, if it's still above $1.2645, the signal says buy, and it says take profit at these green lines. Maybe you take some of your profit at the first suggested resistance level. You see, why do they say take profit right here? Because there's a resistance level. You see, in the past, it hit and dropped, hit and dropped. So the expectation is if there is upward momentum, it may stall as it gets near this resistance. Then they say an alternate spot to take profit, if you are more patient, is the next resistance level here. And you see, again, that matches up with the technical analysis of a resistance level on the candles. Resistance, down. Resistance, down. So the expectation of this signal is upward momentum with the USD against the Canadian, and potential take profit suggestions are at the first or second resistance level on the 30-minute candles. Okay, then the alternate scenario they give also. Okay, alternate scenario would be if it broke below this support level. If it broke below the support level, they're saying then the buy signal has been confirmed as no good. So obviously, if you were buying and your stop loss was below this support level and it broke the support level, that might be a spot that makes sense for your stop loss as a suggestion of the signal, because the signal saying if it breaks below this price, then it's not so much of a good buy signal anymore. It looks more like a sell signal because it's confirming a downtrend if it breaks below this support level. That's the idea of the alternate scenario. If it drops below that support level, $1.2645, then it says look for further downside rather than up. And your take profits then are at the red lines that are written down here. And again, if you go to larger candles, 4-hour candles, 1-day candles, you'll probably see that these take profit suggestions on the downside scenario there are probably support levels back in time on the larger candles. That's where these price levels were likely generated from the technical analysis on the larger candles. So this technical analysis is done for you. You've got the price levels of support and resistance outlined, the direction expected to move based on the fundamentals as the analysts view it, and an alternate scenario in case things go the wrong direction. This is how each and every one of these signals is outlined, and it really makes it simple for you to read. It even goes over some of the indicators. Here they're talking about the RSI, and it tells you the support and resistance levels, etc. Okay. Very, very nice information for you to look at. So we could go on, on the full screen, maybe we'll go and look at, on the web trader, we'll look at the chart on USD Canadian, and maybe we'll look at crude oil because that relates to it. So we could look at any number of signals coming in on the app, and you can trade right from the app quite easily. You can analyze the chart on the app as well. There's no reason why you can't, but if we have the option, I'm going to put the full screen web trader on because it's obviously a little bit bigger to look at. Market Buzz, by the way, gives you fundamental news. If you want to trade on a stock right now, which we're not going to get into deep into this, but I just want to show you if you haven't seen it, you can pull up fundamental news on stocks through that Market Buzz feature. It tells you which ones have the most news volume coming in. A lot of times it's the same stocks that have the most news coming in. We've got Microsoft, Apple, Meta Platforms, Google, otherwise known as Alphabet. So if you're interested in those, then you just tap on, let's say, Microsoft, and it brings up the most recent articles that are talking about Microsoft. In general, shows it may fall 15.3%, and then articles that talk about Microsoft. This one just came out 31 minutes ago. Sony and Microsoft video game deals show an industry in flux. You can read the article, get information about the stock you're interested in right there at your fingertips without having to search all over the internet. The app does it for you. Okay, so let me close the app. And by the way, there's risk management features within the order window as well to calculate your potential loss to your stop loss price, your potential profit to your take profit. And we'll get into that right now in the web trader, which has the same features as the app. So let me go ahead and we'll go to the web trader. And let's bring up that USD Canadian and take a look at what's happening on the chart. And I'm just going to put you on mute for a second, and I'll be right back. Okay, apologize, I'm back. Let's take a look now at this USD Canadian chart. And keep in mind what we said about maybe crude oil and those things. Let's expand, get rid of the order window for now, get a full screen on the chart. And so as we look at USD Canadian, we're on the 2-hour candle and we see that the USD has given back some ground to the Canadian in the past few days, couple days, after quite a run up. So, if we wanted to look and say, okay, there was a run up breaking through some resistance levels. Okay, this was a resistance level here. Let me get rid of some of these lines I drew maybe. We'll draw some fresh lines. So this is a price level that was resistance back here, resistance, resistance. And then once it broke through the classic resistance turning into support, broke through for whatever fundamental news, right? Interest rate talks, talks about stimulus being cut back in the US, bond buying program cut back, interest rate increases expected. So up went the US dollar. So these breakthroughs of price levels were related to fundamental news of some kind. So once it broke through that price level, because of that fundamental news existing, then it becomes support. That price level holds as long as the news holds and doesn't change. Now we see it further run up and hits a price up here that now, after it dropped back down, we could say is an area of potential resistance in this range. So we hit and drop back down. Again, it comes down to the old resistance, which acts as support, and right back up. So again, you can be buying and selling from these price levels as it's ranging between the support up to the resistance, back down to the support, back up to the resistance. And then it kind of zigzagged and then went higher again. Now, if we look at the current price, we're back down here at a price level that was an old resistance, which should act then, according to support and resistance theory, as support now, unless the news changes. And what was the news that drove it up above this resistance level, this price level? Why did the dollar break above there? Because of talk, largely, because of talk about increased interest rates in the US, perhaps, because of talk about decreasing stimulus programs, etc. So unless those talks are going to be changed, or there's news that comes out that's opposed to that or different than that, then maybe this support level holds. The old resistance level holds as support. Okay, and we see it zigzagged at this price, just like it did here, above it, below it, above it, and then it held. Here it went dip below, back above, below, back above, below, back above. So this price level, it's like a decision zone somewhere between here. If I bring this line up or I draw a new line, right in this area, it's kind of a gray zone. Is it going to go up or down? And then it makes a decision to go up. And then now again, it will go up or down from here. So if you say, okay, there's reason for the USD to strengthen if they're going to raise interest rates. So let's say you trust the support level more than the resistance. Okay, so you're saying I trust the support that it won't break below the bottom of this little support resistance zone where we see resistance here and we see support here. There's a gap between the upper resistance here and the lower support here. So this is kind of a gray area zone. And so if you're buying, it might make sense to have a stop loss beyond the gray zone just below this wick. That if it breaks below there, then maybe there was significant news to cause the USD to continue to weaken, and it drops against the Canadian then maybe. Just one way to go about the technical analysis. Right now we're on a 2-hour chart, Mohammed. We're on a 2-hour chart. So let's say that you decide you want to buy on this. Okay, so USD Canadian, let's say you wanted to buy based on the technical analysis. And let's say you're doing a market buy because you like the price, and you think it should go up now, and perhaps you think it will rise somewhere near the resistance that it was at not that long ago, right up here. Resistance, resistance, down it went, bouncing up off this old support/resistance zone. Okay, so if you say your take profit then is somewhere up near this resistance, so 127, let's say 85 as an example. 1.2785. And then stop loss, you say is just below this wick. If it breaks below that support area zone down to here, then maybe you say, I'll admit maybe I was wrong in this. So 126.50 gets you below that zone. Okay, so now we look and we say, oh, we have almost 2 to 1, not quite, but almost 2 to 1 possible profit compared to possible loss if we compare the take profit price to the stop loss price. If that's where it would close at, the take profit compared to the stop loss. So now you just have to decide how much do I want to risk on the move, or how much profit do I want to go after, both sides of the coin here. So this is where the web trader and the app help you with your risk management. As you set up your support and resistance levels with your technical analysis, and you decide I want my stop loss at a certain price below the support level, I want my take profit just before the resistance. Now you can see the ratio, possible profit to possible loss. And if I know I want to risk, I don't know, 250 on the trade, then now I can put the trade size I want. Let's see, 0.5 lot size, I would risk 183. And this converts to your account currency, by the way. So I can see, okay, if I'm willing to risk 250 as an example, and obviously for your account and your risk tolerance, you decide how much do I want to risk per trade or on this trade. And now the risk management's very simple. So 0.6, 219, 0.7. There's my 250 or so, 256 it says I'm risking. If I want to be more exact, 0.68. There's 249.60. There's 250, almost exact. So if that's the price, I'm happy with entering in to do a market move, and this is the risk that I want around 250. My potential profit's nearly 500 if it hits my take profit. Then I set the trade in motion. So my risk management was made simple, and you can leave the lines on the chart. They'll be there when you come back. So your trades that are running, you can keep an eye on as it's approaching where I programmed my take profit up near this resistance. You can see as it's getting closer, maybe I do a partial close at some point, move my stop loss up. We can do all of these things from the web trader and the app. Or if it's going the wrong way and we see it gets near our stop loss mark, we can think about what we want to do next. Okay, so you've got the visuals there as well on the chart. So what about crude oil? What is happening with crude oil? I mentioned crude oil. And so again, let's get rid of the order window for a second, expand the chart full screen. And these are 1-day candles. Let's go to maybe 2-hour candles. Get a more micro view first. And indeed, we see there's some resistance. Okay. You see here on the 2-hour candles, it hit here and dropped. That becomes resistance. It hits a second time and drops. It comes up, hits a third time and drops. It comes up just a while ago, it hit a fourth time and dropped again. So there's definitely resistance at that price level. Now, leading into the OPEC Plus talks and meeting tomorrow, anything's possible. But if there's fears that in terms of oil investors, that increased interest rates could slow the economy, as nations promise they're going to try and stave off inflation by increasing interest rates back up. Maybe there's fear that that could slow the economy, that could strengthen currencies against oil, and maybe this is a resistance level for a reason. Maybe it's resistance because of those reasons, and perhaps this is a spot where many oil investors say, okay, 88, almost 90 a barrel, maybe they're happy and they're selling. It's possible, right? Fundamentally speaking. Technically speaking, you don't have to even care about what the fundamentals are necessarily. Some traders are just purely technical traders, and they say, look at this resistance level confirmed once, twice, 3 times, 4 times. So then you simply could say, all right, where's the support level? I see one down here. If I want to go after just a short run, or if I think it'll drop further, I could start looking at support levels down further, like down in this area here, where we've hit once and went back up, twice and went back up, tested it, right back up, hit, right back up. And so if it is coming down, it breaks this price level. The next support level we see maybe is down around 83 flat, 83 even. So depending on how patient you would want to be, if you were shorting crude oil in this example, you could be down around 83 1/4 maybe as a take profit, just above that support level down here. Or if you're more of a scalper, you're looking at the first support level, which gives you about equal potential profit to risk. And you could do both. You could do one short-term move, one longer-term move down to this support level down here. Okay, I tend to be a little more patient with moves, so 83 1/4 might make sense if you're a patient trader and you wanted to short crude oil on this. So the technicals line up with potentially a short move without much risk for your stop loss if you're putting it above the resistance level that formed in the past couple days. Not that you couldn't do the opposite. I'm not here to tell you what you should trade, but the technical strategy seems to make sense here in terms of how the chart lines up. So let's say you're thinking about selling on crude oil here. By the way, if crude oil is dropping, that kind of works with your idea that the USD might be able to climb against the Canadian. So in that effect, if one goes right, maybe both do. And if one goes wrong, maybe both do. So this is the opposite of hedging yourself, maybe. But maybe just going with the technicals here, it makes sense to you, and maybe the fundamentals could make sense as well. Okay, so if we're selling in this example, take profit, 83 1/4 just before this support level down here. It's kind of a longer term move. 83.25. Stop loss just above the resistance, which would be just above 89. We could go 89 1/2. If you're into round numbers, maybe you want to get it above 90. Just if it tests 90 and then goes down, it's a round number that many times can be significant for traders when it reaches a price and hits something like 90. Maybe that's a spot where it could find natural resistance. So if you get your stop loss above 90, for some traders that might make sense. So I'll go down here and I'll put stop loss 90.25. Okay, so now I'm looking at potential profit 223, possible loss $1.26. $127, or I mean 126, 127. So better potential profit than possible loss. And we're kind of being patient both with the stop loss by putting it quite a ways above this resistance, actually putting it above 90, and taking our profit in a patient manner too. Okay, now another option would be take profit closer, and also you could have your stop loss just above this resistance closer. It's up to you what way you'd want to go about it. But this is one way you could set things up. And there we are. We have a market move. Stop loss well clear of the resistance. You might choose to have it closer, just above the resistance to risk less, and have a better ratio to potential profit to risk. That's up to each trader, obviously, how you set up those details exactly. Any questions or anything before we look at maybe one more chart? You could suggest an instrument to look at, by the way. Those of you wondering what percent should you risk per trade, you shouldn't read into the exact lot size I'm using based on my demo balance here. Whatever percent makes sense to you. You could have 10,000 in your account and say you like to risk 1%, that would be 100 per trade. Or maybe you like to risk more than that or less than that. But you should probably have an idea of what percent you're comfortable risking per trade, and then set your risk management up accordingly. David, that's not a bad way to go either. David's suggesting why not wait for oil to drop below, say, 87.50 before selling, so it establishes more of a downtrend. And you certainly could do that. You give up some of the potential profit that way for maybe more confirmation of the direction that you are thinking it might go. So that's an option as well. You could have a support level drawn here, and if it breaks below this support level, then you sell, because that confirms more of a significant downtrend. It's another way to go about it. And by the way, you could do both. You could trade down from the resistance, and you know, by the way, if we go off 2-hour candles, we go to say 5-minute candles, then maybe you say, oh, there is confirmation of a downtrend when you look at 5-minute candles, because you look and you say, there was a support level here, old resistance, look at the breakthrough candle. That's a confirmed downtrend on the 5-minute candles. Then it formed a new resistance here and couldn't break it. Resistance down, resistance down. So depending on which candles you're looking at, you might have already confirmed a downtrend, David. So it depends whether you have a micro view on small candles or more of a macro view on the larger candles as to your judgment as to whether there is confirmation of a downtrend or not. Very good point, very good question. Okay, so US Tech 100 was requested. We'll take a look at that. Okay, we've got the US Tech 100 up, and we'll expand the chart a bit. Let's get the order window out of the way so we get a full screen. Okay, 1-minute candles, exactly what we were talking about when we started, right? Ranging movements up and down, up and down, up and down, up and down, like it can't find a direction. This is what happens a lot on low volume trading days. And you know, scalpers, even on 1-minute candles, could be buying and selling from the upper limit and the lower limit, you know, from here to here. Sell winner, buy winner, sell winner. Down near the support, buy winner, right? Eventually it breaks through like this one. Okay, maybe it hits your stop loss if you had it close as a scalper. But on a day where you recognize the trading volume's low, market holidays in major nations around the world, like China, for the bank holidays that are going on, very, very kind of sideways moving day all day. This is a definition of ranging, up and down between an upper range and a lower range. And so scalping movements can be had for those of you who have time to sit in front of the charts and do that. Okay. If we look at larger time frames, which most traders are looking at larger time frames if you're being a bit more patient with your trades. Okay, I see a support level down here. Okay, we see the price hit, back up. It hits, back up. It hits, back. How many times could you buy off the support level and win before you lose? Okay, it established the support here and bounced. It got near, if you bought, winner. It got near the support, buy, winner. It got near the support, buy, winner. Well, where should you sell? Well, based on the support and resistance theory, you could have been selling from here, right? This was support. It bounced up. It broke through. It became resistance here. So sell, buy. It gets near the resistance, sell. Gets near the support, buy. Gets near the resistance, sell, support, buy. I sound like a broken record. This is the one time you would have lost. Okay, if you tried to sell from this resistance, up it went. It broke through, and now predictably, it stopped climbing at the next resistance level, which is an even older support level. We see the price got near here, went back up. It got near here, went back up, again, back up, and then it took momentum. Look at the size of the breakthrough candle. It's a definition of a breakthrough candle, larger than the prior candles, showing momentum breaking through a price level that wasn't broken through prior. So boom, breakthrough candle, support and resistance theory, that broken support becomes resistance, which is exactly what happened here, resistance and back down. So now we fast forward in time, we're back up near this resistance. Once again, it's pushing on this price. And the question is, what do I do now? Okay, what do I do now? One idea is if you're a purely technical trader, you'd say, not a lot of momentum today. Maybe I sell from this resistance and look to take profit at the first support level right down here. And I don't have to risk much to get my stop loss just above that resistance. If it breaks through, no problem, I'm out with a small loss. Okay, this is the idea of a technical trader, looking at the price level, support and resistance. If you think the news is small enough today, the momentum is small enough today that this resistance level will hold, then it makes sense fundamentally to you as well to sell. So this is the price level I see. If we want to zoom in, maybe 15-minute candles, take a look. What does this look like on today's movements? We see it tested this price level once, twice, back down. Third time, it really shot down. Now it tested it again and right back down again. Looks like it wants to test it some more. It's not just falling straight down. It's ranging between this upper limit right now, and if we want to narrow this in, this lower limit here. So we see support, support, support. This is all today now, right? Support, up. Near the resistance, down. Near the resistance, down. Near the resistance, all the way down. Soon as it got near that same support level, right back up. Soon as it got near this resistance level, right back down. Again, when we started the webinar, we were talking about today being a good ranging day. That's when you have an upper range that's acting as resistance and a lower range that's acting as support, and it just keeps ranging up and down between those prices. Now, eventually that pattern will change. It's not going to last forever, but while it lasts, you can try to take advantage of it. And that's what we see many times on days like today, where there's low volume of trading. There are market holidays in major nations like China. So with a lower volume of trading, and we looked at the volatility index, it was flat. The dollar index, it was flat. The US indices flat. It's been that way all day. So you could have already been thinking from this morning, ranging day. I'm going to trade ranging with my technical analysis. And just like we saw on oil, it would have worked. We see here it would have been working today on at least 2 or 3 opportunities on the US Tech 100 here. And if you had sold the last time it got near this resistance, you'd just be asking yourself right now, do I want to take a small profit or do I want to wait? Do I want to wait for a potential larger profit? Obviously, it could go up now and break that resistance and climb. This is trading. But you see the statistics today would have been on your side if you recognize that it's a good day for trading ranging, and then you enacted that plan with the support and resistance levels like we're finding on these charts. And I didn't cherry pick these instruments. Someone else requested that we look at this particular instrument, and it looks just like the other charts that we looked at in terms of the ranging patterns. We're about out of time. We've been going for a good 45 minutes. Do we have any other questions before we end things today? And I saw the question about AvaProtect. I'm sorry we didn't get into it today too much, but amen. We'll take a look at AvaProtect in more detail, maybe on Thursday's webinar. You also can go to our YouTube channel, and pretty much in all of my webinars, we take a look at AvaProtect. We go over how it works. Basically, there's a small premium cost on gold, silver, and FX pairings. It's available, and it protects you for defined periods of time against any losses. Okay, I don't see any other questions popping up. Thank you very much for attending this evening's session. I think we'll probably see some nice movements still, maybe some predictable movements that you could go after. See if you find something that you like, and go after those potential profits if it looks good to you. All right, everybody, thank you for joining. Till next time, good luck with your trading.